The cost of living is through the roof. Everything is going up. Food and petrol and even your mortgage. You see it every day when you go to the supermarket or fill up your petrol tank. This morning we'll get the official figures. There'll be cold comfort. March inflation is expected to be confirmed at 4.5%. That's what economists are predicting. Let's bring in our business editor, Ross Greenwood. Now, Ross, the expectation today is around that figure. Is that what most economists are forecasting?
Yeah, the Reuters poll of the economists, Laura, is saying 4.6%. So if you go through, you can see that that's risen at an annual rate from the last quarter of 3.5% to 4.5%. Much of that is petrol prices, but as you say, it feeds through into a range of other things that people have got. It feeds into food prices, it feeds into pretty much everything that we have. You can see the quarterly CPI here, 1.7%. Previously, that was 1.3%. And of course, this all leads to then the pressure that comes onto the Reserve Bank to consider what it does to try and quell that inflation. And the one thing that the Reserve Bank always does is considers interest rates. Now, we know that around the world, central banks, from the Federal Reserve to the Bank of England to the central banks in New Zealand and Singapore and many others besides, are already raising interest rates. Canada and New Zealand, their last interest rate rises were 0.5%. The United States also is suggesting its next rate rise in May will be 0.5%, and yet until now our Reserve Bank has done absolutely nothing. And so there is now pressure right on the Reserve Bank to raise interest rates probably as soon as its next meeting, which is only in a week or so's time, in the election campaign, and to start that rate rise which is needed to try and quell this inflation.
What's the conventional wisdom here, if you like, Ross? If the RBA doesn't move in May, will it have to go 0.5% in June?
Yeah, most likely, and that's exactly what it would do. Now, the point is that the Reserve Bank is independent, thoroughly independent. So the Reserve Bank has got to do what's right. And so this is a really important test for the Reserve Bank, and that is that it should raise the rates. Now, it may say that it wants to wait until it sees the wage index come out, which, of course, is one of its measures for inflation in Australia, that wages are starting to rise. But if it does so, it can wait until after the election. But the real conventional thinking is that it probably should go at its next meeting, but then fundamentally after that it's a situation whereby if it doesn't in its June meeting, which will be the first after the election, it will go by probably 0.4%, bring interest rates to 0.5%, and then most likely keep raising rates from there.
It's a pretty scary time for a lot of people that are struggling to pay bills at the moment. We see Westpac pricing in 14 hikes. I think, you know, we've seen the RBA and other economists say it's 6. I mean, we're in for a couple of years where the cost of living is going to stay high.
So if we look at money markets, and they've been probably the best measure in many ways of where rates head, they're basically saying that the cash rate, which currently is 0.1%, so as close to zero as you could possibly have it, they're saying that it will get to 3%. So in other words, that says if you're paying 2% for a mortgage now, if all those rate rises are passed on, and they will be, and in fact there's a chance that banks start raising the rates even without the Reserve Bank, then that means your mortgage of 2% now goes to 5%. And of course, you're right that many people who have taken on mortgages, particularly if they don't have the deposits backing them, might find it difficult, especially if those interest rate rises start to take the edge off property prices. Now, bear in mind that also these rate rises, the inflation, the lockdowns in China that's slowing the global economy is also having a big impact on financial markets. So overnight, you've had a massive plunge on Wall Street, down more than 800 points. Here again, after 3 days of having our market well down, it's expected that our market will be down. So look at this. The Dow Jones last night down 2.38%. The tech-laden NASDAQ with Google and Alphabet, its owner, reporting after hours disappointing results. It's down by almost 4%. Come there, back to Australia, the share price index on futures markets this morning, it's down by almost 1.5%. And that's on top of falls of almost 5% that it's had since the middle of last week. So just to give you some sense of, if you like, the change that has come across financial markets, really as a result of the China lockdowns and the slowing in global economic growth.
Yeah, the clouds certainly seem to be gathering, don't they, Ross? We'll check in with you just after 10, after our market opens. Thanks so much.
Well, no problems.